Hello everyone, welcome to my channel. My name is Stephen Fox. We've had a wild 5 days lately in the stock market. The only thing I think that can make it through this increase in long-term interest rates, the 10-year bond went up to 4.1%. This is doing some of the work for the Fed, and it should help control inflation. So the good side of this is we should be getting good inflation numbers because of the repressive effects of the high long-term interest rates. The Fed zombies have been coming out in force and saying, you know what, we're only going to cut rates about twice this year and not the 6 times that Wall Street is predicting. If they did cut 6 times, it would be because something broke. And that would be for the wrong reasons. And you're not going to make money in stocks if it goes down for the wrong reasons because we're entering a recession. But there's no chance, in my mind, that we're going into a recession, at least anytime soon. Retail sales came in at 5.59%. They previously were 3.97%. Month on month, it increased 0.6%. and 0.3% was expected. So retail sales were way higher in December than anybody thought they would be. The Fed is worried about inflation. This means that Wall Street is starting to believe that, hey, we're not going to get 6 rate cuts. The stock market was really choppy, especially on Friday. I think the best of the artificial intelligence stocks is Nvidia. I think I'm much more likely to make money if all we have to contend with is a slightly inflationary environment because there's signs that it's coming down. It's going to come down. It's just not coming down as fast as Wall Street would like. And the Fed recognizes that it's going to come down. For the long term, and by long term I mean 2024, you're not fighting the Fed. The Fed is eventually going to cut rates. They're just not cutting them as soon as Wall Street wants. And Wall Street does not want the 6 rate cuts anyway. They just don't realize it. The reason they're pricing that in is because they think that something's going to break. They're putting in the possibility that that's going to happen. But I will have tight stop loss on my stocks so that I don't have to experience that. I'm giving Nvidia some room. And I have a lot of faith and belief in it, but I'm not going to take a major loss on it. I'm going to trade and live to trade another day. Nvidia is important for their GPUs, their autonomous vehicle chips, and also now robotics. And as you look on the screen, you can see all the different partners that they have in robotics. And it includes such things as Boston Dynamics, Sanctuary AI, which is making a robot sort of like Tesla's, only it doesn't look as finely controlled as Tesla's Optimus. The Optimus looks much more developed and has finer movements and is able to walk, whereas Sanctuary's AI robot doesn't really walk. And also Unitree is a major robotics company. But they have things that do your vacuuming, that cut your lawn, things like that. They're going to be very important in robotics, mainly because Isaac is used to talk to the robots. It used to be that you had to program the robots, and now the main programming language is going to be English. You talk to the robot, and the artificial intelligence inside programs the computer as to how to do it. So this is a major advance, and I think robots are going to advance exponentially in the future. especially when they get to the point where robots don't even need to be given directions of what to do, but they can be given a general directions like, do what these humans are doing, and the robots watch the humans or watch videos of humans doing a task and learn to do the task from observation. As Yogi Berra once said, you can see a lot with observation. Now, I don't know what Tesla's intentions are with Optimus as far as with artificial intelligence. Are they going to develop their own chip for the robot to integrate artificial intelligence, or will they be using Nvidia's Isaac? That will be a major breakthrough for Nvidia if Tesla decides to use Nvidia's chips for their robot. And looking at the chart on Nvidia for the last 5 days, it looks like, hey, this is pretty good, Nvidia went up. But Friday was like hell. I did add on Friday at the dip, at the beginning of the day, simply because I knew it was going up eventually and would keep going up, but I wanted to grab some in the 550s. It eventually made it close to 560. I don't like the way the interest rates are going. I don't like the way the VIX is threatening to go over 15, and I don't like the zombies coming out in force. I think we got that weighing on our shoulders, but it is making progress, and I think it's a very solid stock and a very necessary stock. I'm going to keep my stop loss in at 545 and hold to that. So looking at the chip stocks that I'm following, right in the center, Nvidia made about 3%, Broadcom made about 2%, Advanced Micro Devices made over 7%, which is really good. I got stopped out of a super microcomputer, SMCI, which lost 7%. I think I saved myself on that one, and that's why I put a close stop on that stock. If interest rates would go back down, I would get back into all of these AI stocks, these 4 stocks that I'm following. But right now, I want to concentrate on Nvidia and hope I don't get stopped out on that stock. I don't like the way the market is acting. It's acting very bearish. It's very moody, and it doesn't seem to have a direction that it wants to follow. It's a very uncertain time, keeps me up at night a little bit, trying to figure out what's going to come next. And the best thing to do, and I urge you all to do this, is to put stop losses on your stocks. We can trade in this environment. This is one of the most difficult environments to trade in. I'm used to it from the 1980s. And the 1980s was just like this. You had high interest rates and the stock market kept going up. You would have these times where there would be dramatic losses, but then it would recover. Back in those days, the ethic was you just hung on no matter what. And it turned out to be good advice. And maybe it's a good advice for right now, unless you believe we're going into a recession. If we're going into inflation, that indicates that the economy is good. If jobs hold up, if retail sales hold up, things like this hold up, there's money being made. In a recession, nobody's making money. You just want to get out of the market. Hope you own some bonds before it happens. If I see a recession coming, which I do not see at this point, I will jump into bonds and probably triple leverage bonds. But the TMF, the triple leverage TMF on the 20-year or more bonds, that is going down. The market's trying to decide what to do. I think artificial intelligence is the only thing that's going to make it through in an inflationary environment, and I think Nvidia is the best of the breed, and so that's where I'm putting my money. Unless interest rates start to come down and the Fed zombies take it a little easier.